Everyone is a genius when Bitcoin is mooning, but no one wants to talk about it when the price is crashing. People are bringing up Epstein FUD and all this gold versus silver debate, gold versus Bitcoin, etc. Now is the time, in my opinion, to be talking about Bitcoin. Now is the time to be focusing on it. Now is the time to be zeroing in. Now is the time to have a strategy, but not just a strategy, to have tactics that are predetermined, that no matter what happens with the price and the noise, you know that you are going to execute on. Today, we have a very special guest, Bisher from Stormbreaker, who leads and heads up one of the biggest crypto brokerages in the country. And he takes us on a deep dive and he gives us the trading data of the most successful investors within his brokerage. He also explains what those who lose money consistently are doing and how you can buck the trend and become successful no matter bull market or bear market. Stay to the end because we also give price predictions. We also give probabilities of those prices and timeframes on when we think the market is going to bottom. This is a ripper episode, guys. If you get some value out of it, like and subscribe. Look forward to reading your comments. So 4 months ago, Bitcoin was 126,000 and everyone was a genius. Today it's 70K and everyone's sharing Epstein FUD. I'm way more excited about Bitcoin today than I was in December. I'm going to share a quick clip for you from December, Bisher.
I think, high level, I think I said last week or the week before on the podcast that 97,000 for Bitcoin USD was a key level. And if we broke that, nothing good happens under 97, that we needed to hold 97. And if we held 97, I thought that in Q1, Q2, we could do 125, 150, 170.
I then went on to say that I was selling my altcoins, kept my Bitcoin hodl stack, but trimming the family's Bitcoin. And so in December, I wasn't too excited, but now I'm getting excited, as you can see from the shirt. And that's why it's great to have you on today. But the easy predictions have been made. Now it gets a lot harder, right? So today we are going to put the receipts on the table. We're going to talk charts, price targets, probabilities, timeframes. But honestly, none of that matters, I reckon, more than what comes later in this episode. So Bisher, you run one of Australia's largest crypto brokerages, Stormbreaker, and you're going to share data from inside the factory on the habits of the people who actually make serious money in Bitcoin long term. And that is the stuff that you just can't Google. So first, Bisher, welcome to the pod. I'm sure your phone's been ringing off the hook. What are you hearing from clients right now? What's the mood? Talk to me.
It's been craziness. The trading floor has been absolutely just mental. I mean, the name of the podcast is an accurate description of what's happening here. Money, markets, and mayhem. It's been craziness. And I'm glad that you actually came and swung by when you were in Melbourne visiting family. Come onto the trading floor so you get to experience it in the flesh. But
that was epic. There was like 40 people, hive activity. It was like, I seriously thought like I was in a scene from The Wolf of Wall Street, right? People were just on phones making calls. The standing ovation when I walked through the door. Like you guys are killing it out there.
Thanks, man. I appreciate it. No, there's no midget throwing and head shaving going on the trading floor. I can promise you that. But yes, it is a proper firm, a proper institution. But yeah, it's been craziness. I mean, between mid-November till mid-January, the price was stuck between 88,000, 85,000 to a high of 95,000. So we were in the 10K range that was just really mind-melting. From almost in all of December, from mid-December till mid-Jan, the price moved about 4,000 USD. So that was actually very painful for us. A lot of people think that when, as a Bitcoin broker and as a Bitcoin self-proclaimed Bitcoin advocate, that when Bitcoin price comes down, that I'm somehow in a world of pain. Maybe in my holdings portfolio, yes, but as a brokerage desk, the volatility is fantastic. Whenever the prices are ripping to the upside or melting to the downside, that's really when we see a bunch of investor activity. We see people buying, we see people selling, and because we're a brokerage service, we're attempting our best at guiding people into making good choices and avoiding the common pitfalls that the average punter may make when they come into the market. But more on that towards the end when we get to deep dive the data. But it's a privilege to be here and good to spend some time with you on the potty.
Okay, and you told me that off air, you told me that like me, you're more excited for Bitcoin and for markets than you've been in a long time. give me your overview. What do you think's happening right now? And tell me why you're more excited. And is it true that 99% of your net wealth is in Bitcoin? I did not know that.
Yep, 100%. I wouldn't feel comfortable telling people to buy a boatload of Bitcoin, put your retirement funds, your self-managed super fund into Bitcoin, find, some spare cash behind the sofa, sell the second car that you're not using and buy yourself some Bitcoin if I myself wasn't genuinely invested in this asset class and I've gone all in, because I don't want to be having any sort of adversarial relationship with my clients. So when I'm as invested as I am now, you got to understand though, my average acquisition price is probably closer to about 15,000, 16,000 USD. So my all in is very different from somebody else's, but at the same time, I'm still accumulating BTC. So for us, it's just been a matter of getting to be squared away with our clients, because I wouldn't feel comfortable going out there and constantly spruiking and pitching Bitcoin and talking about its benefits and what it can do for your portfolio and how you can use it in real life if I myself wasn't genuinely invested in it. Because imagine you go to a Porsche dealership and you got this car salesman who's selling you Porsches all day, and then he goes home in a Mercedes. That'll be it would be genuinely like confronting and a bit upsetting that the Porsche salesman is driving home in a Merc. So that's the way I am. I want to be in the same position that I'm advocating for my clients.
That's incredible, and we're gonna get deep into the charts, and we're gonna talk price predictions, etc. But I'm sure that I have a lot of listeners out there that are probably in their beginning stages of learning and understanding about Bitcoin. I know I have a lot of listeners out there that are dedicated to trying to escape the 9 to 5, and they've bought into the fact and the reality that working harder is not going to do it, and investing smartly and compounding time is going to be the only approach, especially with the world that we're moving into. And, I look at my background, and the majority of the money that I've made has been long-term investments that I've allowed to compound, either Bitcoin, mainly Bitcoin and property, right? Mainly property and now Bitcoin. But maybe you can tell us a little bit about your origin story with Bitcoin, or the background that you come from and how that shaped your thinking, because to hear you're all in on Bitcoin, I think would be confronting for a lot of people, even people who are in the space. But maybe you have a unique perspective on this that you can offer, that not just your brokerage, but this perspective has helped shape you and allowed you to go all in. Maybe if you want to share that story.
Absolutely. I mean, for me, I was fortunate enough to be born and raised here in Australia, but I come from a Lebanese background. During my grandmother's time when she grew up in Beirut, $1 bought you 3 Lebanese pounds, right? This was when my grandmother was a little girl. Today, $1 buys you something crazy like 150,000 Lebanese pounds per
That's
USD.
some serious inflation and debasement.
Serious hyperinflation, serious currency devaluation. And this was the worst part. At one point, $1 bought 15,000 Lebanese pounds. And then overnight, the Lebanese government and the Lebanese central bank took a deal from the International Monetary Fund to restructure its debt, but it effectively devalued its currency 10 times over. So
overnight.
Overnight. So this was in 2021. It's not ancient history, and it's not like, and I know a lot of people will say, yeah, but who cares about Lebanon or some Middle Eastern backwater? But you got to remember that Lebanon and Beirut was the Paris of the Middle East. These were people who were quite affluent, incredibly educated, and contributed towards art, music, science in a meaningful way, particularly throughout the 40s, 50s, 60s, and 70s. Then there was the Civil War. Then there was the currency debasement. And then on top of that, they took this terrible deal with the IMF, which destroyed its currency's purchasing power. And the only thing that helped me provide for my family back home, because I've got extended relatives and my immediate family is all based in Melbourne, some in Sydney and obvious Sydney pockets that you may be aware of. But in terms of where most of my extended family is, they're all back home in Lebanon. And the only thing that really got them through was the fact that they were able to have a Bitcoin wallet that they can then send and receive from. And I was able to send funds back home to provide for them. And this was at a time when Bitcoin was trading at around 50,000 USD, 40,000 USD. And so for them, it's an absolute lifeline. And when I was in Beirut back in 2023 was the last time I was there. There's like a convenience store, a petrol station, and then there's a little crypto shop, because people are going in and they're converting their Lebanese pounds for USDT and Bitcoin. And this is the way that they use the currency. So Lebanese pounds are for only immediate purchases. So they only use it for what they need that day. And then anything that they're trying to save up for, whether it be a holiday or whether it be storing some of their short-term savings, it goes into USDT. And any of their long-term savings is going into Bitcoin, right? So the Lebanese people genuinely understand Bitcoin as a monetary asset far better than anybody who's been probably a bit more privileged and living in a Western world, which is not a problem. But it's just the fact that it comes out of necessity. And I'm trying to advocate, and I'll do my best to advocate to my clients and our investors and our audience, that don't buy Bitcoin when it's too late, right? I'd rather be 3 hours early to the trade than a second late, because it was an overnight devaluation, 15,000 Lebanese pounds per USD to 150,000. Whereas in the Western world, for Aussie dollars, US dollars, euros, GBP, it's a far slower bleed. You don't feel it straight away. Like a 10-to-1 devaluation overnight, you're going to feel that, but 100%. Yeah, so that's really what it boils down to. So for me, Bitcoin isn't just a speculative investment. It's not just a growth asset. It's not just a risk-on play for me. For me, Bitcoin represents a genuine lifeline, and the ideology behind Bitcoin and the network behind Bitcoin gives me a chance to believe in a better future with a better money. I'm a father of 3, and I want to make sure that my children have a better world than what I came into. And a big part of that is having a better monetary system. And, I'm not trying to be an idealist or a romantic or, try to exalt Bitcoin as like some sort of, we're going to sing Kumbaya and be on a Bitcoin standard. It's not like that. But when you have the financial incentives aligned and you remove the currency printing power away from the government and the central bank, and you put that back into the hands of the people and the network, and therefore people can have a reason to save, and you retain people's purchasing power over time, then yeah, it makes the short-term volatility just become quite obscure and not irrelevant, because I built a brokerage to take advantage of the volatility. But at the same time, it's like it doesn't detract from any of the long-term thesis that I'm building here.
And like a lot of people are becoming more familiar with gold because they've seen recently the price of gold go up. But this process that you're talking about, where people are storing their value in currency, because I consider gold a currency other than their own local currency, is thousands and thousands of years old. That's what gold has been used for. And a lot of people will say, gold is the more stable version of store of value, etc., because look at the price of Bitcoin, etc. But I think that misses the point that if you go back to Weimar Germany after the World War, that gold was swinging 200% up, 50% down. Like gold was acting like Bitcoin. And what people need to understand, that in these periods of transition, there's volatility in all these assets. Even in the 70s, right? Gold went from $200. I think it was something like $200 to $800. Then dropped went from $30 to $200. Then it dropped 50%, and then it went up to $800. Right.
Yeah,
and so
that's right.
During these periods of transitions, which often happen in the fourth turnings, which I talk about often on my podcast, there's volatility across all asset classes. But the thing that I love about Bitcoin, and I'm sure you're the same, and for me, like, I love the philosophical stories and I love the narratives around all of the history in relation to store of value and currencies and wars and etc. But the one chart that I keep coming back to, and why I think of all these trades, Bitcoin is the best, is just because of the size of the asset. If you look at the size of the asset versus gold versus stocks, we can even have a look at it versus real estate, etc. You've got that map that Croesus has put up, and I'll throw it in post. I'm sure you've seen it, where you have all the different
asset classes, and you got like
Yeah.
Bitcoin just in the corner. We are still so early in Bitcoin playing its part in this story that is a
100%.
story that's been alive for thousands and thousands and thousands of years.
It's true because the concept of the stock market or an equity market only came into fruition in the 16th century when there was traders sitting by the side of Dutch ports before ships left out the Dutch East India Company, and they were like, okay, they're selling shares in the ships. And so that was a very early version of the stock market. And that was then what birthed equity, right? As an asset class, right? So it's huge. It became this $100, $200 trillion global equity market that is publicly traded, 5 days a week. And that's now, everywhere. You can't go anywhere in the world without thinking about the stock market. You're seeing massive corporations that are selling to you all the time. Nike, Google, Amazon, Microsoft, Adidas, they're all there selling their product all the time, and they're publicly traded companies. So what we've got now is the birth of a new global macro asset class, and it's only been around for 17 years. Imagine being able to trade stocks for the first time in the 16th century, and you're going home to your mum and your dad and saying, "Mum, I'm a stock trader." And they go, "A stock what? What are you trading? Stocks?" They would have been completely perplexed and bamboozled by the idea that you're trading shares in a ship that's halfway across the world collecting spices from India, Malaysia, Indonesia, and then you're coming back, and then depending on the success of the voyage dictates how much of the share that you then mark up in value based off how it all worked out. So if half the ships were destroyed, then you've lost half of your value. So it's super interesting for folk to try to conceptualize a market, because that's what we're trying to explain to people, is that Bitcoin is a true global market. But yes, the volatility is certainly a feature, and it's not something to shy away from. It's something that we should be excited by, something that we should be hyped up by, because that's what gives you immense opportunity. Without the volatility, it's a very boring market, or it's already been successfully priced in, therefore no price discovery.
The volatility is the cost of doing business for outsized returns. And many of us have had the strategy right. We think that Bitcoin is going to go up, but if we don't have our tactics right, that volatility is what comes and shakes you out, right? So it's those who have got the sound tactics, which we'll touch on towards the end of the episode. But a lot, to your point as well, with the equities, a lot of things that people don't, something that people don't realize is that the way that we trade equities today, where the average holding period is months rather than years, that is brand new. And equities as an asset class that was mainstream only started really becoming popularized after World War II, where we were going through a very similar fourth turning in the 80 to 100 year generational cycle as what we're going through now, where the value of government bonds was about to be debased. So you said earlier, in Western countries, we don't inflate overnight like we do in Lebanon. We slowly boil the frog in the pot. And people realized that back after World War II, and some bought gold and others started trading companies, equities, right? And now today, or from the dot-com bubble onwards, when the internet was birthed, it gave us the technology to be more short-term, to trade equities. I think the way that people need to understand Bitcoin is Bitcoin has come now because we have the technological ability for it to be here. That's why it didn't come any earlier, right? And so to ignore it would be to be ignoring the technological advances and the things that people move onto as technology advances, like they did stocks from the dot-com bubble, right? And now stocks are a massive $105 trillion asset class, right? And it's only been 20 years since that really took hold. So Bisher, talk to us about Bitcoin. What is happening? Give us your thoughts on Bitcoin. What do you think is happening? Give us your overview, and then we'll dive into the charts and we'll riff back and forth. And we'll try and work out for the audience where we think Bitcoin is going, what the roadmap looks like over, the next 3 to 6 months, and how people will make money from that either way.
Yeah, let's unpack what I'm seeing here in Bitcoin. In my humble opinion, I've never seen Bitcoin more oversold in my 10 years in brokering experience. And this isn't me just coming off the top of my head trying to spruik the exaltation of BTC. RSI is extremely oversold. That's a pretty technical measure. On-chain data shows that short-term holder profit loss ratio has never been worse. We've also seen a number of small wallet holders absolutely nuke their Bitcoin holdings to zero. So there's a number of on-chain analytics that we can use to back up what we're saying here, which is people who are holding less than one Bitcoin are starting to sell their Bitcoin or exit the market because their wallets are going to zero value. And then the short-term holder profit loss ratio, which is a measure of people who have been holding Bitcoin based off UTXOs over the last 90 days, have been completely capitulating towards current market conditions, which is genuinely the worst time to be selling. It's actually a buying opportunity. But the sheer rapidity of the move, going from 126 down to a low of 60,000 as of most recently, I think has genuinely scared people. But people have to understand what you mentioned there, which is in the fourth turning, these things accelerate. Silver, which was going on an absolute tear over the last 12 months, went down 40% in a 24-hour period, 40% drop. Bitcoin has gone down 45% over 4 months, and people are freaking out. Imagine a near halving of your portfolio value in a 24-hour period. Granted, though, it's bounced back up since then, and it's going to continue to go on its forward march. I'm not bearish on silver by any degree, but it's important to realize that with Bitcoin being extremely oversold, it indicates to me, Mark, that there is a forced seller in the market. A forced seller is somebody who is having to unwind their positions and have to liquidate their Bitcoin holdings regardless of the price, because they may have blown up in 1010, which is a suspected theory here. But when you see the Bitcoin chart just go straight down, as it has done in 2022, as it has done in 2018, as it did in 2015, 14, these market cycles repeat, because what happens is Bitcoin recovers, goes on a forward march, it goes up and up and up. Everybody starts to get incredibly leveraged, believing that it will never go down again. Then that leverage that they take on is the very thing that kicks off the new bear market, and then is the next time we have that leverage blowout. And these liquidation cascades, they become faster and faster with the rise of things like perpetual swaps, which is where people get access to insane leverage on short-term charts. So you can put in a $10,000 deposit onto a centralized exchange, get leverage 10 to 1, and now you've got a $100,000 position. But if the market moves 5 or 10%, and on Friday, mind you, it moved 15% in one day, 15% in a day, man, that's craziness, right? It just toasts, it completely wipes people out, and then it forces people to become forced sellers, either through automatic liquidations, or they've taken out, this is what the traditional financial players will do, is they'll do things like get leveraged against the yen because the rates have been so low, and go out and buy a bunch of assets, Bitcoin, cryptocurrencies, equities, other assets that have a better yield or a better rate of return. And then what happens when the rates go up or the US dollar weakens against the yen, which we saw most recently, then you just see this complete liquidation wipeout, complete cascade of forced sellers who have to sell their assets in order to meet short-term liabilities or to be able to meet their debt obligations. That's what I've been seeing here. So that level of oversold, it's a gift from the heavens above in order to scoop up some cheap Satoshis.
So you mentioned 1010, October 10, where the forced liquidations basically happened on chain or on the crypto exchanges or dexes, whereas this recent liquidations from last Friday, the talk is that was largely related to the IBIT, to the derivatives on IBIT, which is the Bitcoin ETF, that they had gotten so big, and a lot of the wipeout was in relation to that. More traditional exchanges. Is that what you're seeing as well?
Yeah, absolutely. And I mean, we have to keep in mind as well that the derivatives market around Bitcoin is actually significantly larger than the Bitcoin spot market itself. So to give you an idea, we might be able to do $10 million worth of trading volume in a day, but the options market and the futures market and the perpetual swap market might do billions of turnover combined every single day. So the spot market is a significantly smaller market, which is where you get a lot of price discovery occurring in the derivatives market. What we mean by that is that there'll be things like complex things like gamma squeezes, short squeezes, delta hedging, dealer hedging. All these kind of things are occurring in the derivatives market, and it's occurring at a rapid rate because most of it is automated and algorithmic. It's not like there's me and you behind a screen sipping a coffee, smoking a cigar, and making discretionary decisions on portfolio and risk management. This is done on a completely automated basis. When that happens, these decisions, these forced liquidations, they're pre-programmed, right? And so what ends up happening is the option market gets incredibly large. And so what people will do is, imagine you're a Bitcoin holder, right? And you've got a large Bitcoin stack, say a couple of thousand Bitcoin in it, because you were an early investor from 2013, 2014. You can sell the Bitcoin and lose the Bitcoin, and you no longer have it, but you've captured the gain and you've got all these kind of tax implications. Or you can deposit your Bitcoin into IBIT and then start trading options against your BTC that is now sitting in an ETF, which is tax-free. The deposit of your spot holdings into IBIT's ETF, it shows as an inflow. So let's say I had 1,000 Bitcoin and I deposit it into IBIT. Then what ends up happening is I don't have the tax implications of it, but then I can start doing things like selling calls and selling puts to generate an income against my Bitcoin holdings that is now safely secured in IBIT's ETF. But then what happens is that if the price moves significantly, which we saw in 1010, then what happens is that there's a lot of dealer hedging, there's a gamma squeeze, there's a sell-off in the spot holdings or the ETF itself, in order to cover margins, to cover positions, and then that triggers more selling, which then triggers more margin covering, which then triggers more selling. So this is the cycle, and then unfortunately it just causes this forced selling liquidation cascade. But guys like you and myself get to scoop it up on the other side.
I think that is like a lot of this terminology. I'm sure that 90 to 95% of our listeners haven't touched options like us degens, but the main message that you want to take away is, a lot of people talk about options as the tail wagging the dog, but options is the dog, because the options market is so much bigger than the derivatives market and the options and the perps market. And this is the same for equities as well, US equities. The options and derivatives markets are so much bigger than the actual spot markets that they are the dog. Right? They are the dog. And what that causes is these massive price dislocations. Now, we could argue that Bitcoin is in a bear market and that it'll go down over time, or continue to go down till it hits a bottom and then comes back up. But these dislocations cause opportunities where, like you said, the hodlers, the ones that don't care about any of that, they just want to compound their wealth over time, they're scooping up cheap Bitcoin. Like, I turned my DCA on at 82K. I turned it off over 90K. I turned my DCA off over 90K because we're starting to get extended. I'm happy to let my stack ride. And then at 82K, I turned it back on. That was my first buy. 77 was my second buy. And recently at 65 was my third buy. Now, I haven't backed up the truck yet, but I will keep buying the longer that I keep seeing these dislocations. And if the price goes to 55 or 45, I will increase my buying. But the majority of people, they do it the other way. They buy on the way up and they start selling on the way down. And you're going to show us some data that actually proves that that's the case. And what we want to promote here on this podcast is to start fading your feelings and to start thinking about doing it the other way, because of this nerdy stuff that we're talking to you about, derivatives, etc. These are the things that cause those dislocations and give you opportunities if you have tactics ready and a long-term plan ready, which I'm sure we'll touch on. You mentioned RSI. Can I quickly pop up a chart and we can kind of explain to the uninitiated audience what RSI means? So RSI stands for Relative Strength Index. And there's some other technical things that go into it, but I won't go into the technical detail. But what's worth noting on this chart is every time the RSI hits these extreme oversold levels, you see Bitcoin go on a price run, right? So there is a case to be made that 60K was the bottom, right? And we'll talk about probabilities soon, but there is a case to be made that 60K was the bottom.
What do you think about that?
Yeah, look, I mean, there's an old saying in the financial markets, which is one who tries to pick bottoms will wake up with smelly finger. So, but yeah, I would say, yes, we're incredibly close, my dear friend, because, the sheer rate of change. So the RSI is a measure of rate of change, like how quickly one price has gone to the next. You look at the data on chain, you look at the data in macro, you look at the data in liquidations and in derivatives markets, it's all pointing to a local bottom. The percentage likelihood that this is the absolute pico bottom is, for me, the way we price it at our firm is that we're over 50% likelihood that we are close to the bottom, but we're not at an absolute certainty. We're not at an absolute lock as of yet. Even when we were at a low of 15,000 in 2022, we were quite certain that we were close to a bottom, but it was about 80% probability that we were at the bottom, but we couldn't guarantee that it was. So right now, I would say that we are pending any sort of outlier events, a hot kinetic war between US and Iran, an escalation in the Middle East, some sort of escalation in the Russia-Ukraine conflict, a blowout in Japan because they had their elections recently and the parliament swung right. So do they continue to nationalize their stock market and their bond market, which may mean that they don't want foreign investors playing around with their ultra low rates, which could cause some pressure downstream to everybody who is quite leveraged through the yen carry trade. So there are those, obvious risks that could escalate, but barring any of those situations heating up and getting more inflamed, we're probably quite close to a local bottom. So it's great that you mentioned that. And I love the fact that you're saying bringing the receipts, right? Let's bring the receipts. I've been buying Bitcoin. My first buy when we broke below 100,000 was 88K. My second buy was 80,000. My third purchase was 74. And then my fourth purchase has been 63, right? So I've been buying this stuff. Like I genuinely, but what I do is when I start my DCA, a lot of people do fixed dollar cost averaging, which is fine. You buy the same size every time. And that's a viable strategy. But for what I do is when I'm higher up in the market and I'm higher up in my DCA strategy in terms of price, I size it a lot smaller. So my $88,000 purchase was just shy of 10K. My $80,000 purchase was just shy of $20,000. My 74K purchase was 30K. And now my 63K purchase was $40,000. So as the market drops, and my next buy will be at 50,000 even, and I'll drop in 50 grand. So, and in my mind, that's how I've kind of priced it. I'm like, I'll start with 10K. If we get down to 50, I'll deploy 50 and this is capital that is generated from revenue and profit that Stormbreaker makes selling brokerage, right? So we run a brokerage service. People buy and sell through us, Bitcoin, other cryptocurrencies. We earn a 2% fee. And then with the revenues, we're actually deploying it back into the markets because of the fact that we genuinely are on the same side as our investors. So I love the fact that you're steadily dollar cost averaging. I just add to my investors a bit of color and say, your DCA doesn't necessarily have to be the same size every time. A lot of DCA calculators that you use online will show you your DCA returns with a fixed investment amount every time. But I say that as the market gets more and more oversold and the extremeness, the severity of the correction continues, then you should be sizing up your investment. So I'll take a small bite and then size up.
That's the martingale strategy, right? Is that
to an extent? Yeah. So there are martingale strategies out there, but my martingale is when, let's say you take a position, you double it. So you go to 10, right, 20, 40, 80, 160. Yep. So I'm not necessarily, but yes, it is some form of a
doubling your DCA,
but a martingale is every 10, for example, every 10% drop in the market price, you double your position. So right. Whereas what I'm doing is I'm just, as we get lower and lower in the market price, the likelihood that we're closer to a bottom increases. Therefore, my sizing increases as well, right? So that's how I approach it.
I think we should like click on this a little bit deeper, because I think now we're going beyond strategy, why we think Bitcoin, gold, etc. is going to be an asset to invest in for the future. And we're getting into the tactics. And what I've learned being active in markets, each and every day for the last 5 years, is I make the most money when I have predetermined tactics, and something will happen that'll trigger that next play, and I just make that play unemotional. That's when I make the most amount of money. And you also mentioned that Stormbreaker is buying the Bitcoin as well. That's something that I started doing. I started doing that so we had the COVID boom. I got an e-commerce business. We had the COVID boom. I rode up that demand during that time. And then after the COVID boom, when people started returning to the streets and to the stores, we saw that our profits our revenue started to drop. So rather than, I did go out and try various other different products, but rather than go out and double down on new products, I started DCAing into Bitcoin when Bitcoin was 20K.
Nice.
Right? And I started buying Bitcoin. And over that period that I was DCAing into Bitcoin, I've almost made more profit from the increase in the price of Bitcoin than I have from running the business. So it is important to understand what business you are in. Are you heading into a macro winter for your business? And is it potentially a good time to start looking at a treasury, Bitcoin treasury or a gold treasury for your business because of the macro wins? And the other thing that I love is the DCA. Like I recently hired a personal branding coach, 22-year-old kid who's just started making like $100,000 in a month, right? From his coaching. And, young kid gets the money, spends the money, and then, business might change, the algorithm might change, might not want to do coaching anymore. You don't know what's going to happen. There's so many things that will happen from 20 to 30 as we know, right? And I said to him on the end of one of our coaching calls, I said, listen, you're starting to make some money now. Maybe I told him the story about the guy who DCA'd into Bitcoin $30 a day, who invested something like 100,000 and it's now worth 1.6 million. I said, go out and Google that, learn compound interest, who Warren Buffett says it's the eighth wonder of the world, and DCA a portion of your earnings that you're making at the moment into Bitcoin, whether it's $1,000 a month or $2,000 a month. And he landed on $2,500 a month. He said, I could do $2,500 a month. And the way I pitched it to him, I said, put in what you would be comfortable blowing on a good time. Because that psychology about it will allow you to put it in without hesitating, because it's just like you and if it goes to zero, you would have blown it on a good time anyway. But I said, I'll make you a bet or a deal that in 10 years, the time that you're going to have based on the back of this investment is going to be the best time of your life, right? And I think when people are out there running a business, or they're surgeons, or they're high net worth individuals working, that kind of steady DCA strategy is the way to go. But for those who want to be a little bit more active, like you and I definitely believe that your advice on the DCA is something that you should follow. Is something that, well, I can't give financial advice. It's something that I would follow, that increased DCA strategy. I think it's just, it's mega.
And one thing worth noting is that I look at investing as time. Right? A lot of people look at returns on a pure dollar basis or on a nominal basis. What's my percentage return? What's my dollar return? Which is perfectly fine. We need to chase and be mindful of our P&Ls because that's what we're in the markets for in the first place. But I look at long-term investing as a time generator, right? We all have the same 24 hours in a day. We all have the same access to markets. We all have the same access to information, some more than others, depending if you're Nancy Pelosi and whatnot. They've got access to quite fantastic information.
Big options and derivatives trader.
100%, mate. Well, not her, it's her husband, but we can't really, these guys do my head in, man, honestly. Because if I was to do something similar, which we don't engage in those practices of insider trading, we would go to prison because it's fraudulent. But they get to have a congressional position and they get to trade on insider information all day long. But because it's under their husband's account or their brother's account, it's not the same, right? So it's quite funny. Anyways, moving on, I digress. So in terms of what we've seen here is that we all have access to the same amount of time and information and resources, especially in a beautiful country such as Australia, which has given my family and I so much, and has given me a family that allows me to just an environment where I can raise my family safely. So with that in mind, investing is a time generator, because let's say your pathway to retirement based off your current savings rate and how your super fund is going, you might be able to retire in 30 years, right? Whereas if you invest in Bitcoin, you invest in assets outside of what is your traditional assets, such as equities and bonds. I'm a big alternative asset investor. So whilst a significant portion, almost my majority of my investments are in Bitcoin, I have some gold knocking about, I have some silver knocking about. I'm in alternative assets as a whole, but my main investment being Bitcoin is because I want to generate as much future time and runway as possible. And the best way I could give that example is when Stormbreaker buys Bitcoin and we put it on our balance sheet, it means that we don't have to be worried about our next monthly or quarterly profit. Whilst we are a business we're in business for profit, if for whatever reason, we're not generating revenues and we're not able to generate a profit, then I still can pay my staff. I can still continue to operate. I can meet my licensing costs. I can meet my compliance costs because of the fact that we have Bitcoin on our balance sheet that can be then liquidated to provide us the cash that we need to meet our obligations. Right now, we have enough Bitcoin on our balance sheet to last us 8 years, even if I don't turn another single dollar of profit for the next 8 years. That is an incredible amount of runway. So the fact
that's assuming that Bitcoin stays at the same price that it is today for the next 8 years.
Yes, that's right.
Yep.
And that's assuming that my costs don't go up over that 8-year period,
sure.
Right? If my costs stay the same and the price stay the same, I've got 8 years of runway with the amount of Bitcoin that I have right now in terms of my running costs of the business. That's a huge position to be in, and that's a very powerful position to be in. But it's not a strategy that you can deploy and then get 8 years of runway straight away. You need to deploy this strategy and be consistent with it to then get that material runway or shortening of your retirement that you'd be looking for. So if you're heading into your retirement, you need to be consistent with this strategy to take your retirement runway from 30 years down to 15 years away. And it also, if you are in retirement, it may increase your retirement savings from a 10-year runway to a 20-year runway, therefore staving off the pension even further. And the pension is nothing these days. It's barely true. It's not really inflation adjusted. But that aside,
you don't want to be getting to pension age and to be eligible for the pension. Like in my mind, as a younger person today, or as someone who's out there talking about markets and finances, the worst nightmare would be for me to wake up at pension age and to be eligible for the pension, because that in and alone of itself tells you that you're not going to have enough money to live a great life.
Agreed, 100%. And that's what I'm saying is that these investments, whether you're investing for Bitcoin on your balance sheet as a business, gives you more runway, gives you more operational runway to operate. If you're investing in Bitcoin in your self-managed super fund, it shortens the runway towards retirement. If you're putting Bitcoin in and you're in retirement or heading towards retirement, it extends your runway without having to rely on a government pension. Because for me, that would be a massive I would have gotten my investments terribly wrong if I have to turn around and rely on the government. I think that for me, I'm in a very fortunate position where financial markets have been what I've done for nearly 10 years now. And I promise you that Bitcoin and my other investments are going to ensure that I don't have to rely on anyone. I don't have to rely on my children, because my children should be focusing on providing for themselves and looking after themselves and raising their own family. I'm not going to rely on the government. I'm not going to rely on any handouts, because of the fact that I've done the right thing in my 20s, my 30s. I'm 32 now. I've done the right thing in my 40s and 50s, so that I don't have to rely on anybody, so I can protect and preserve myself and my purchasing power long into the days that I've stopped trading and I've retired away from the scene.
Yeah, and you mentioned to me and we'll get into some of the data that you've got to share, but you mentioned to me you've seen a large increase in self-managed super funds opening up accounts with Stormbreaker. I personally have a self-managed super fund that owns Bitcoin, and I have a trust that owns Bitcoin. I don't own Bitcoin in any of my in my personal name, and that gives me optionality and ability to sell the Bitcoin and not pay exorbitant personal income gains and things like that. Go out and get tax advice in relation to setting up to the correct structure to set up your Bitcoin purchases. But I can say that I only use self-managed super funds and trusts to buy my Bitcoin. But you mentioned to me that you've seen an increase of self-managed super funds that are opening trading accounts.
Yeah, I mean, just to let me have a look at the numbers here. So from July 2025 onwards, we've seen a sharp increase in SMSF openings, and we've seen a 40% increase in the amount of accounts opened being non-individual year on year. From December 2024 till December 2025, we've seen a 40% increase in SMSF accounts and trust accounts coming on board, because a lot of our investors are now starting to smarten up and realize that industry super funds are a trash vehicle. Again, not financial advice, speak to your financial advisor, but are starting to wake up to, how poorly performing these industry super funds are. And then a lot of folk are also realizing that they can do better for their business by adding Bitcoin to their corporate balance sheet. And they're not calling themselves a Bitcoin treasury company and issuing credit instruments around it and doing all kinds of sailor financial engineering. All they're doing is they are a mum and dad that runs a cafe in Oceans Grove, which is, if you ever go down there, you and I should actually go for a surf down there one day. But they've got a cafe there and they have some of these delicious pastries. They're one of my clients. And then they put a small percentage, about 10% of their profits into Bitcoin in their company account, which means that if, when it's not the busy season and they're not selling as many coffees and pastries as they used to, they can still have the Bitcoin there to give them runway and provide for their family.
And I just want to touch on this because we mentioned a little bit earlier with the story about your grandparents in Lebanon, right? Like how it happens, the way that it happens in the Western countries is very different. If you are going to have currency debasement and if you are going to have monetary inflation, that inflation and debasement is usually, you have to look at the assets that are held in these countries. So in Australia, the majority of net wealth is held in property, and then it's superannuation funds. So if gold is rising, if Bitcoin is rising, if silver is rising, and your property is rising and your superannuation funds are rising, you have to have a look at the amount that these are rising, if they're rising, versus all these other assets. Because that's the way that the frog gets boiled in the Western countries, right? Slowly, your superannuation or your property starts getting either taxed with new taxes that the government comes out with. We've spoken about these ad nauseum on the Unemployable pod. There's new property taxes, there's increase in property taxes, right? And these all come off your bottom line and your capital growth. Or you have to look at other asset classes like commodities, gold, silver, Bitcoin that are going up versus those assets. So you're slowly, even if you have all your net wealth in property or super, you're slowly still being debased. Okay, not as bad as the person who has no assets. They're going broke. They're going beyond. I say that they're going underneath the poverty line. They're going below the poverty line. If you don't have assets, you're going below the poverty line. But if you do have these traditional assets, you can still get debased versus these other assets, right? Like you've seen with gold doubling, all right? So I think a lot of people are starting to wake up to that, and that's why they're opening these corporate accounts.
Which is also why the wealth gap continues to widen. The gap between the haves and the have-nots is accelerating because the haves are the ones that have assets, businesses, bonds, equities, real assets, real estate, gold, silver, Bitcoin. They're the ones that are becoming wealthy. Whereas the have-nots, the savers, I call them, it's really unfortunate that a hardworking individual who might be on the tools all day or working a white collar job comes home, orders in some Uber Eats and then sits down with their family to have a dinner. they're the ones that are getting crunched, right? Because they don't own the assets, right? They don't own the income producing businesses. They don't own, monetary assets like Bitcoin, gold, and silver. So they're getting crunched because in this environment, the wealth gap is only becoming more and more apparent, which is why during periods of hyperinflation, there's almost this hatred and this envy of the rich because it becomes more apparent. And then that's when you start hearing socialist policies like tax the rich and tax the properties and do all this kind of stuff, which is, it's not, we're seeing it now, but it's not the cause. The cause isn't the wealth, right? The gap between them is that there's those who own the assets and those who don't. And then the ones that own the assets, they're becoming wealthy through no fault of their own, sometimes through circumstance because they were born into it. I myself was born into absolutely sweet F all. I came into this country, my family came into this country as immigrants. We worked really hard, and that immigrant mentality of work really hard sometimes bites you in the rear end at times, because the idea that you can just work hard and get ahead is dead, unfortunately. Working hard is definitely a portion of the formula. Don't get me wrong. I worked incredibly hard to build this brokerage, but you need to have financial assets and you need to have business assets if you're going to want to get ahead, to get out of the rat race, because hard work doesn't get it on its own.
You can work hard and get rich, but I define wealth and rich in a different way. For me, it's more about freedom. And I'm of the belief that you can't no longer buy your freedom. You have to invest for it. You have, we even get a lot of business owners that are working 70 to 100 hours a week who are now saying why am I doing this? I'm seeing Mark on the beach with his kid during the week. Like, I might not be as rich as they are in financial terms, but I think I live a wealthy life because I'm trying to invest for my freedom so that I can spend my weekdays on the beach with my kids and my family, right? And so there's a difference between getting rich and getting wealthy and having freedom as well. And I think that's a lot of the things that we talk about on these podcasts. So, mate, everyone wants to buy Bitcoin at 40K, but no one wants to plan for it. Mm-hmm. Take me into the belly of the beast and share with me the stats on those who are the most successful investors, what they're doing and what the biggest losers are doing, so that we can give a little bit of guidance on, how to dial in those tactics.
Okay. So let's go high level. Successful traders. So this is data that's going back from Stormbreaker's early history, right? 2022 till 2025. So we've done a big deep dive on a large data set, which is our clients' behavior and transaction history. So that way we can come to this podcast and give you guys incredible insights so you can prevent yourselves from being like the masses who tend to underperform. And we as a brokerage genuinely want to see successful investors because we've got the economic incentive for it. So if we have successful investors, they're more likely to come back and trade again. And then that's how we continue to grow our business. But really high level, successful traders are those who buy Bitcoin and are disciplined, which is focused with low activity. So what we mean by low activity is we found that there's a significant outperformance between those who hold 3 coins or less, as well as 50 transactions or less, beats 90% of accounts. So the 10% of accounts that we have with Stormbreaker that hold less than 3 coins and have transacted less than 50 times over a 3-year period are the most profitable cohort in our data set.
Wow. So we're assuming when you say coins, you mean crypto tokens. So yes. you could assume that potentially the 3 coins that they're buying are the biggest 3 tokens. Maybe it's Bitcoin, maybe it's ETH, maybe it's Solana, and they're making
Bitcoin, Ethereum, and XRP are our 3 largest holdings.
There you go.
And those, if clients just bought those 3 coins, they've massively outperformed the rest of the market, or the rest of the cohort.
And we're not telling you what to buy here. We're just saying that those who bought less, who didn't spread their risk across multiple different altcoins and shitcoins and traded less, so less in and out, less trading, they're the most profitable accounts.
Yes. And also we found that those who held over 10 altcoins, almost none of them were profitable. close
There
to
you
zero.
go.
There was about one account over
One account.
over 10,000, my friend, 10,000, right? So that's that. We have a client book here of 10,000 clients, 10,000 accounts. And yeah, there was only one out of 10,000 that had over a holdings of 10 coins that ended up being profitable. And again, this individual was a statistical anomaly, not some sort of genius. There's just lucky timing and a lucky spread of assets, right? So that's why it's 1 in 10,000. So I couldn't encourage our investors. And I beg people, Mark, believe me when I say this, I beg them. I say, just right now, my only 3 or 4 coins that I'm recommending is Bitcoin, ETH, Sol, and Hype. That's it. Right? And I said you could probably do away with either ETH or Sol because they're kind of the same trade. So pick one that you like more than the other and just focus on Bitcoin, ETH, and Hype, for example, right? And that's what I've been getting folk to focus on. And I said, please guys, and then they come in and then they want to buy all this garbage. And that's why we've actually delisted we started with about 500 coins back in 2023, just to kind of give people a spread of assets that they can buy. But the data informs us of our listing strategy, and we've actually culled our list down to 30 coins, right? Because we want to limit, we don't want to stop, because again, you can buy USDT with Stormbreaker, you can buy Solana with Stormbreaker, withdraw it to your Phantom wallet and buy as many meme coins and alts and rubbish tokens as you want. It's not like I'm going to stop you. I encourage you to just follow the data, which is less is more. Don't transact super frequently, buy, sell, swap, sell, buy, sell, swap, buy. And don't be buying a random bunch of garbage, because you're going to completely toast yourself over the long term. Buy 2 or 3 assets that you have incredibly high conviction in, so that when the volatility hits, you know exactly what you're buying, rather than trying to look for the next coin, the next 10x. You know exactly what you're going to be bidding. And that's what we've seen our investors become successful with.
And just to be clear, what you're proposing here actually makes you as a business less money.
Correct.
The less people trade, the less they spread, and the less money they put into all these other coins, the less money you guys make as a brokerage, right?
Correct.
And so you know,
I'm advising
signaling
clients
that.
I'm advising clients not to get me a new Porsche, right? Bisher has enough Porsches in the garage. You don't need to overtrade and get me another one. And this is what's crazy. They think that I'm trying, genuinely, Mark. I don't know what it is. People genuinely think that I'm gatekeeping some sort of information from them. I'm gatekeeping from them the one token that's going to make them rich. I'm gatekeeping from them the secrets of the trade. I'm literally presenting it. I'm bearing all in today's podcast to show you what the data is like. So when I turn around to investors and I say, just focus on Bitcoin, ETH, and Hype, and just Bitcoin majority of your portfolio, just a couple of percentage points in the speculative plays, they genuinely think I'm working against them. They genuinely think that, not everyone, most of our investors are lovely, but there's a small cohort of investors who think I'm somehow preventing them from success. I'm preventing them from getting access to big returns. I'm saying, no, this is what the data has shown me over 5 years of being in business. Let's just focus on what's most profitable, even if it's not what generates me the most revenue.
All the best investors that I have heard from, learned from, spoken to say the same thing. The way that if they do, like I listen to investors that speak about silver as a speculative bet, not a mainstream, not a big bet. It's a speculative bet, and it holds a very, very small percentage of their portfolio because it's a speculative bet. The best investors make their biggest returns not on percentage gains. It's by having the conviction on something that is a more asymmetric compounder, something that over the long term has a more proven track record, right? Like you've got now, you know, like for example, commodities at the moment. Commodities are hot. We're going through potentially we're going through an industrial revolution where there's going to be an $85 trillion build out for the AI stack alone. There's only $900 to $1,000 trillion in the economy. So almost 10% of that is going to be diverted or created to go to the AI build out. And you're going to see the same thing again. You're going to see investors, instead of going and just buying ExxonMobil, which is the biggest oil producer in the world, or buying Newmont Gold, which is the biggest gold mining company in the world, they're going to go and play the speculative names. They're going to go and play the ones that swing crazily and have high volatility. And the majority, even if they have the strategy to invest in this commodities boom, are going to lose money because their tactics are wrong. Whereas the best investors I listen to, they know how to size their positions accordingly when the odds are in their favor, i.e. when we're at hated prices. When a market is hated and prices are hated and the sentiment is through the floor, that's when these guys are buying these companies or these commodities. And they're selling when the sentiment is fever pitch.
Yes.
Right? And the average investor is getting that the wrong way around. If anyone wants to...
is in the data as well. I mean, this is something I want you to speak to as well, which is help me unpack this, right? Our trading volumes are almost always skewed towards the buy side. We see over 80% plus buy side trading in almost all times in January till December 2025. Can you guess when we had a drop in buy side volumes?
I don't want to say it, but I bet you it was in like the April dip or the recent dip in Jan.
Yep. So April, December was our dips in buy side volume.
So that's when the sell increased.
Correct. We had seen it go up to 40% selling in those periods of time.
And normally, so 60% buying, 40% selling, and normally it's 80% buying, 20% selling.
Yeah, and in January it was almost 95% buying, January 2025.
Which is after the Trump inauguration.
Correct. So we had, and this is me saying to investors, it's like, I'm a constant bid in the market. I'm a constant buyer, right? But I always say to my investors, I say, you need to buy low and sell high, right? And it sounds easy, but I'm saying if we're at a low price relative to where we were 3 months ago, 6 months ago, that's a buy low signal, right? And I encourage my investors to drop in more sizable investments at the troughs than in the peaks. I actively tell people when they're coming in trying to buy, all-time highs, I say, look, let's just buy half a Bitcoin, or let's buy 0.3 of a Bitcoin. So that way you're in the market. And if it continues to run great, we can continue to deploy capital on the next pullback. But if you buy 0.2, 0.3, 0.5 of a BTC and the market drops 20, 30, 40%, you've got spare capital to pick up Bitcoin at a cheaper rate and therefore potentially double the amount of Bitcoin that you're holding or could have held.
I'm like, it hurts my heart to hear those statistics, right? Like you assume that that's the case, that that's what people are doing. But when you see the statistics that are saying that that's exactly what's happening, it hurts my soul because I know that a lot of people are losing money. And I'm not immune to it. Like I've done it. And this is the differentiation. When I'm trading more than investing, I make so many more mistakes because I don't have the tactics down, and I am more inclined to be at the whim of the market fluctuations, right? Whereas, when I was buying the majority of the Bitcoin I own, I bought it from about 20K, and I was thinking about those buys 12 months prior because I lost a lot of money. See, I lost a lot of money in Luna. In 2020, I bought 100K Bitcoin at 12K. It went up to like 30K or whatever. I swapped it into Ethereum at 1,000. Ethereum went up to 2,000. Then I swapped it into Luna at like 34. Luna went up to $115. And I had all of a sudden this 100,000 turned into 1.4 million. And I'm like, whoa. And then the Luna crash happened and I lost it all. And so I exited the market because that's what people do when you get wiped out like that. And I was just thinking, replaying everything that happened. Why did it go wrong? What did I do wrong? What happened? And so I was thinking about that for 12 months during the bear market. And so when we got 15K Bitcoin, 20K Bitcoin, I had conviction because all my moves were premeditated. And now the majority of the Bitcoin I own is from that time, and I won't sell it because it was premeditated and it was conviction. I've been premeditating this dip. Now I'm getting excited. Now I'm starting to put money to work because they're premeditated trades. And this is the difference between, strategy, trading, and having tactics to capitalize and to be rich, no matter what happens with price.
100%. And I mean, something that I've also found here in the data that's quite interesting is that in 2023, 24, and 25, whilst we did see, and I did state earlier that less transactions are better, smaller but more frequent transactions are better than larger and less frequent transactions, right? So what that means is, yeah, we don't want to overtrade and buy and sell and swap, because what we found though is that it's not just the number of transactions that's the killer, it's the different types of transactions. So buying, selling, swapping, that leads to underperformance, because you're each time you break that compounding.
And we're giving the fees to you.
Yeah, you're giving the fees to me. You're getting me a new Porsche. I do need a new 911 Turbo as well. So I'm not encouraging that behavior. But in terms of the way I look at it is that there are people who do buying, selling, swapping. That's not great. But if you do frequent smaller purchases, which is only one transaction type, so only buying, and you do it in smaller but more frequent transactions, you outperform somebody who does larger but less frequent transactions. So what I say to my investors, if you've got, say, 100,000, 500,000, $1 million to deploy, right? Depends on how much size you're looking to deploy. Put in $5,000 a week. Put in $1,000 every 5 days, right? That's a successful strategy in my opinion, because you harness the volatility and you're not trying to time the market. You're spending a lot of time in the market, but you're constantly just bang. Every day, you might put in even $500 a day. $500 a day is, and then when the time comes when the market has an extreme fluctuation or extreme break to the downside, like we saw on Friday, you can then say, I've got 30 grand with Bisher left, I'll buy.
Put a bit more.
Bang, just put in more, right? So that's what I've seen has been successful. You hybridize, you put in a bit of a hybrid approach between large capital allocations in extremely dislocated markets. But when you don't have extreme fluctuations in the markets and you don't get extreme volatility, just smaller but more frequent purchases is quite profitable.
Trying to be the master of the universe, it just doesn't work over the long term, right? A solid framework that is reliable and proven wins every time. I can tell you a couple of stories. I've seen people all of a sudden go to self-managed super fund, liquidate their funds from their fund, go to self-managed super fund, and then whooshka at Bitcoin over 100K, just put it all in one hit. I advised my brother-in-law, I'm like, when Bitcoin, when it was 95K and it dropped below 97, I said, sell your Bitcoin, you buy it back cheaper. And I've seen him agonize as the price goes down about putting it back in. And I'm like, this is when I'm getting excited and my tinglies are going off and it's like, great, cheaper Bitcoin. But he's agonizing over it. And then I found out that he just went 50% in at 80. And I'm like, whoa, start with 50%, start with 10%. And then as it drops, go a little bit bigger, but people do it the wrong way around. We keep harping on about this because it's just so common. Start with 10%, then it goes to 75, go 20%, like we spoke about earlier. Now, Bitcoin was 60K and he's only got 25% left or whatever. And it's what happens if it goes to 40, right? And it could, and we'll touch on our predictions before we wrap up, but it's people just have to watch this, go away, think about this problem. Most people buy into the strategy. Most people now are accepting of the fact that debasement is happening. So come up with a strategy that is simple, that is repeatable, and that helps you to sleep at night, and that can't knock you off your horse no matter what happens to price, no matter what noise or Epstein FUD that you're seeing. You're just going to be like a machine repeating the process over and over again. That, I think, is the most important takeaway from today's pod, if you ask me.
100%. And the last thing I'll leave you with as well that I think is worth mentioning is that there have been a lot of investors who have been Bitcoin only, and some investors who have had no Bitcoin alone, right? So there's three cohorts that we have, right, that I can break down for you, and we'll leave it on this because it's an interesting point of data that I'd like to bring to the investors' attention, which is number one, those who were Bitcoin only over a 5-year period massively outperformed both cohorts of no Bitcoin as well as Bitcoin plus alts. right? What was really interesting was Bitcoin plus less than 3 coins. So anybody who traded over 10 was just not profitable. But if you had a cohort of coins, so Bitcoin, ETH, Sol, for example, right, 2 other coins, when you do that, you outperformed Bitcoin in 2023 and 2024 because they were massively depressed. So Solana was below $10, for example, right? And it went on a tear over 200. So massive outperformance there relative to Bitcoin's 15,000 to 120K. So, but in 2025, that Bitcoin only cohort won out again. So there are periods where it does make sense to have a couple of other alts, but majority of buy and hold, set and forget investors will just benefit from being Bitcoin only. And those who had no Bitcoin in their portfolio were not profitable at all over the last 5 years. So they're, again, because they were looking at cumulative 5-year returns, none of them were profitable in that cohort who were just Bitcoin only. So it goes to show you whether you're Bitcoin alone or Bitcoin only, or your Bitcoin plus a handful of other alts, which there are periods of genuine outperformance when you do have altcoins, but they're not consistent rate of returns. They're hit and miss in terms of which years you're going to get to be profitable. That's a strategy that I can get behind. So for anybody who's watching this, this is me giving you genuine alpha straight from the broking desk. Buy Bitcoin frequently in smaller sizes and buy in larger sizes when there's a market extreme, and keep your altcoin picks to less than 2 or 3 that you have incredibly high conviction in. And that's it. If you deploy that strategy for 5 years, I can almost guarantee, I can't say with 100% certainty, but very high probability that you'll be a profitable investor with me over a 5-year period. That's what the data shows me.
That's amazing. That's amazing. I mean, you heard it there. This is what you're doing for a living. And don't trust your word, trust the data.
Yeah.
Right? Like at the end of the day, the data doesn't lie. I always say math over narrative. Math over narrative. The most important thing for me to make decisions is price, but it's based on predetermined strategy, right? Let's talk about price. Let's talk about the charts. Let's put some predictions. Let's put some receipts out there. I'll share screen and we'll go through a couple, and you can give me your quick takes on them. All right. So I want to go through a couple of the charts, and these are some of the things that I'm basing my predictions off. So you will know, and maybe you can explain this better than I can, that where you have large trading blocks, so where the volume is highest, that those prices often set a bit of a floor, because people's psychological, like, I can't deal anymore, is around about their entry level. So you've got, if you look back over the last 2 years, you've got a lot of Bitcoin was purchased at around that $62,000 mark. And so there's an argument to be made that that's why 60,000 was a floor, because that was the entry level for a big swath of purchases. Then there's a huge gap between 60 and 40K, where the price just went from 40 to 60 really, really quick. So there's not much trading volume there. So if you look back over a 3-year period, the next big trading block is around that 35 to 40K mark. So the way that I look at this when I say math over narrative, and I want you to kind of explain those trading blocks and why they're relevant, is I kind of see now 60 has been tagged, and I spoke about this on my podcast last week when we were at about 75, 77, that I think 60 was in play. That's the 200-week moving average, or I think it's lower, it's about 55. The long-term holder cost basis is around about 55. So we're now at that level, we've bounced off it. But if we do get the bad macro, if Bitcoin is in fact leading gold, silver, and liquidity and not lagging, right? If gold, silver, and liquidity has kind of caught up and liquidity is peaked and gold and silver are about to correct and the stock market's about to correct, then there's an argument to be made that Bitcoin could drop down to that shelf of 35 to 40,000. So before I go through my probabilities and my targets, talk me through these two charts and what your professional opinion is based on these.
Yeah, I mean, I would say that based off just what we're looking at here, we've got an incredibly strong level of support between 50 and 60K. And I would say, and look, whilst there is definitely a case to be made that we can breach 50 and then go towards that next meaningful level of support, and that, you know, we're going to be slicing through it like a hot knife through butter. I think that 50 to 60K, because of all of the technical reasons that you had just described, which is meaningful support is now being found here. Technical support is here. Long-term holder basis is here. The 200 EMA and SMA are sitting right there on those moving averages. And I believe that each bear market has shown us that each drawdown is less. So the 2014 drawdown was 80%. The 2018 drawdown was 70%. The 2022 drawdown was high 60% drawdown. I think that we're going to see a 50% drawdown correction move in this cycle. And then as we go up and then reclaim those previous all-time highs and start tracking higher. So on a balance of probabilities, I would say that we're around 55% likelihood that we have found the local bottom. We may, scoop and do a liquidity sweep below 60, tag that 50K handle just for the fun of it, just to really make people feel that maximum fear and panic. And then we're going to run up to the upside and put up new all-time highs over the 12, 18 month period following that. But there's also a case to be made that, which is why we've priced it around a 30% probability that we do tag 40. So whilst we're not preparing for it as a high probability event, we are also making sure that our investors have spare capital to deploy just in case, so that way they can take advantage of that extreme sell-off. And then that would bring our drawdowns to the historical average that it has, which is around 75% when we hit that low 40K handle. And then that would line up quite nicely with a macro bottom, which would then line up quite nicely with a year after that being the next, starting that post-halving or pre-halving recovery. So we'd be building up into that reduction, which would be anticipated in the year 2028.
Yeah, so if for those who follow the 4-year halving cycle, typically Bitcoin has bottomed around October in the fourth year, which would be October this year, 2026, right? In the previous downturn, I think maybe it was a 2028 analogous. Bitcoin did a sweep down, rallied into March, and then dropped back down again. So that scenario that you're saying, where it rallies here, gets to 70, 75, comes back down, tags 55, is in line with previous bear markets. And I think it's important to really bang on about this point. We don't know what's going to happen with the macro. We don't know if we're going to have a stock sell-off, a gold, silver sell-off, and a macro downturn, which does bring 40K into play, or if things are going to keep chugging along, Bitcoin's going to bottom out 60, 55, and then go up. But we have to be prepared for all scenarios. So I think it's amazing that you're advising clients to have a little bit of dry powder there, just in case, because we need to be ready for all probabilities.
100%, because in the worst case scenario, let's say, best case scenario, markets recover and we go towards, say, and we're chugging along to, 80, 85, 90, 95, 100. We get above that 100K block, which is a massive overhead resistance. If we get through that and we're finding support there, then bang, we're off. But you're going to have plenty of opportunity between now, which is 70K, and the high 60s, as we do our forward march to 90, 95, 100, to buy in as you've got spare capital. But if in the worst case scenario, or that we do drop to 40K, you are going to be really grateful that you've got spare capital ready to deploy and potentially pick up 1 or 2, 3 Bitcoin that you could have thought that was just not possible only just 6 months ago.
Is this monthly chart? So Luke Groman, who's one of the people that I followed, was beating the drum that he was selling his majority of his Bitcoin at 95K. He had 60K as a price target. And he recently posted this chart in his weekly macro, which I subscribe to, basically saying that this is the monthly chart. And each time Bitcoin has bottomed, this technical strength indicator has gone a little bit lower. It has gone a little bit lower. And so he makes the case that the bottom's not in. Where that bottom will be, we don't know.
but that there's still a little bit of time before we find that bottom. And like you said, bottoms are not an event, they're a process. And the big institutional funds, the ones that are putting serious capital to work, they pay attention to these charts. They use these charts. And so if anyone out there who thinks that they need to go all in on Bitcoin now, you probably don't need to do it that way, because the likelihood of like a V-shaped recovery up to 125K is unlikely, because these technical things have to play out for big money to start being allocated. So thoughts on this chart?
Yeah, I mean, I would just say, look at the range that has been set from peak to trough is almost identical to the peak to trough that we would set in 2021 to 2022, which is the sheer cliff that we've gone on, this relentless selling pathway that we've gone through. What I don't like is the excessive bear posting at local bottoms, just as much as I despise excessive bull posting at tops. So to call for more now, whilst it is prudent to have a strategy to say, okay, there could be potential more downside in the scenario that there is more downside, what do we do? That's perfectly reasonable. I have no issue with that. But to say that this is going to be even worse and it's going to get, we're calling for blood, and it's just like, it's the same thing as when bulls are posting about Bitcoin at 125 saying we're going to 250, we're going to 400, we're going to 500,000. It's just the bears, they get so frustrating when they go, we've literally gone from 126 down to 60K in a span of 4 months. It's been relentless selling. The sheer rapidity of the move is just in line with the depths of the 2022 bear market, and they're calling for 30K, 20,000, and it's just like doom posting for the sake of doom posting. Whereas like, I would say, look, is there a case for 40? Absolutely. Is it a non-zero chance? Yeah, it's about a 20-30% chance that we get to that level. But I would say that we are far closer at a local bottom at 50, 55, if we do a sweep below 60, than we would be calling for anything a lot lower than that. Just because of the fact that if you look at the range from peak to trough on a linear chart and also a log chart, that peak to trough drawdown is almost identical, not on percentage basis and not on a dollar basis, but we're just talking about the structure of the move. So the structure of the move from that upswing to the downswing is almost identical. So that's what I'm looking at.
Yeah. So this is the log chart here, and this is the linear chart. And so basically the log chart, you could probably give a better explanation, but the log chart is the scale is based on percentage moves rather than price moves. So going from 10K. So if you look at the monthly, going from 10K to 20K is 100% move, but you can't see it on that chart. Whereas going from 100K to 200K is also 100% move, right? And so the log scale works on percentages and kind of smooths that out. I always say, if in doubt, zoom out and switch to log scale.
100%. And what a log also does is that it gives you a genuine way to be able to put into perspective parabolic moves, because what it does is it measures a move from 1,000 to 10,000 the same way it measures a move from, say, 10,000 to 100,000. So it looks less exponential. So a 10x move going from 1K to 10K looks less aggressive when you're measuring a move from, say, 1K to 10K on a linear chart.
Yeah, and these rainbows that you often see are all log charts, right? These are all log charts, which is, the best investors are looking at the log charts. All right, we'll finish on this. We'll finish with the receipts. So I'll go through some of the things that I think are important, some predictions, and I think we were pretty closely aligned in our predictions. Maybe the percentages were a little bit off. So here are the receipts. Price levels that I think matter: 60 to 62K, which is the 2-year accumulation zone that we referenced before. This is where a lot of buying and volume and supply was eaten up. That 54 to 58 is the 200-week moving average. And that has historically in bear markets been a very good predictor of the bottom, which we saw on that rainbow chart just before. And I think the nuclear or the worst case scenario is the 35 to 45K, which is that supply zone based on the 3-year look back of where the supply is. But for this to happen, I think you have to have bad macro, and you have to have maybe a Bitcoin treasury company unwind, where a lot of the smaller ones start having to sell their Bitcoin because their share price is under 1 MNAV. So let's say their share price is worth 50% of their Bitcoin holdings. This is where you get like activist investors come in and sell the Bitcoin because the Bitcoin's worth double what their company's worth, right? And that might create some sell pressure. These probability scenarios were actually AI. I put like a shitload of charts, shitload of reports, and into Claude, and then I asked it to give me, these were the levels that I found based on my data, and then I asked it to give probability level scenarios of these unfolding. So interestingly, Claude seems to think that the 45%, the most likely is the 35 to 45K, with a bottom in Q3, Q4. And I think you discounted that at about 30% probability.
That's
and then,
correct, yeah.
Yep. And then the other probability that we spoke about, which you said is about 45, 50%, was that 55 to 70, and then the recovery into mid 2026. And then the last thing is like emergency printing, flash crash, then V recovery, because the Fed comes out and starts printing. But, you know, how do we put a time frame on that? And then the other thing was a 60K bottom straight to 100K, very low probability, probably going to get time to build positions, right?
Yeah, absolutely. And I would say that in any one of those scenarios, if we do get a flash crash, or we get a DAT unwind, or we have we've seen the worst type of scenario, it's not like you're going to, miss the boat by being conservative. Right now, being a bull is like being in a bullpen, right? We don't want to be running around, going crazy, buying up everything. We just got to build and conserve energy, because trust me, I'm the most bullish Bitcoin broker you've ever met in your life. But I'm advising my clients to just take it a little bit easy. Of course, they can deploy capital whenever they like, because we operate on a brokerage basis. So a client can call me after me saying, hey, let's just take it easy a little bit. Let's not deploy fresh capital just yet. They can send an email to the trading desk saying, buy Bitcoin, and we'll do it straight away, right? But right now, is being a conservative bull is more, you'll be getting more rewards than being an aggressive bull. But there will come a time when being an aggressive bull makes sense. And you and I will unpack that in the next podcast, I imagine.
100%. I want to get Bisher on like once a month and just basically give updates on where it's at. I think this is the most important time for a regular podcast on this. Forget about when the price is mooning. That's when we're all partying and celebrating. Now, when everyone's in the doldrums and it's hated, this is when I want to be coming on, giving receipts and giving takes, so that then we can sit back and just chill, when the bull market comes, and enjoy. And then, why it goes lower. All these reasons of why it goes lower, short-term reasons. 200 companies hold 12% of all BTC, borrowed money for sellers. ETF holders are underwater, so their cost base is around 82K, so that might switch behavior. Monthly momentum stays bearish for another 2, and institutions won't bid the chart, they'll lean on it. These are all short-term, why it goes lower. If you look at why I'm long-term still bullish, these are all fundamental structural things that I don't think are going away long-term. We showed the chart, Bitcoin market cap versus gold, silver, and all other fiat assets. It has more room. For me, that is the number one bull case, is that it just has so much more room. And when everything is trying to get into that small door, watch what happens to the price and volatility. Governments must print. We talk about stopping immigration and stopping the money printing, but the math demands that they must print. It cannot be stopped. We've crossed the Rubicon. Gold's proving it in real time. And all you need to do is survive the drawdown and capture the upside.
Delicious. It's like saying nothing stops this train, Lynn Alden. Nothing stops this train, my dear friend. So yeah, a little bit of a detour, a little bit of a pit stop before we go on to new all-time highs. But it's funny, even the most bearish pundits are saying 30, 40, 50K. They're not saying zero anymore. So this is what's really interesting, is that in the last bear markets that you and I went through, when I was a bullish broker at $1,000, at 10,000, at 30,000, 50,000, 100,000, every time people come back to me and say, oh, you're a bullish broker, you're bullish on Bitcoin, you got it wrong. They would say and follow up with, it's going to zero. Now they say you're wrong, it's going to 40,000. It's like, all right, cool. We've at least gone from it's going to disappear and go to zero to it's going to go lower. So all good, mate. No problems.
Yeah, exactly. Nothing stops this train. I did a whole pod on Lynn's talk at the Bitcoin conference. We'll reference it. We'll throw it up here. It's a ripper. You've got to go listen to it. Talks in detail about a lot of the things we've discussed today. One of the other more controversial takes, and this is how I know that it's probably the right take, is I get so much pushback on this when I say on Instagram, for those who don't have any assets at all and are just starting out in this game, I think a better goal than saving for a house deposit is saving for one whole Bitcoin, because the optionality that one Bitcoin is going to give you is going to just be mega. And you just can't save as quick as the debasement is happening these days. So
chef's kiss, my friend. That's a great note to leave it on.
Mate, where can people find you? Give us a chat. We'll put a link in the description below. We'll pop a link down the bottom of the screen. But you might be offering something special.
Yeah, so for those who have come to us, thanks to Mark and and the rest of the Unemployable crew, get a 33% discount on their brokerage fees. So our standard house rate is 3%. You guys are getting it at 2%, which is pretty cool. On top of that, you're also going to get priority and VIP onboarding. So you're not having to wait any more than 8 hours to get an account up and running. So that's also really cool for most investors, and that's regardless of entity type, self-managed super funds, trust. We get them onboarded during business hours, same day, which is quite nice. And then also, if you want to book in a chat and have a free consultation, go to stormrake.com. I'll make sure that Mark gets my booking link as well to drop it into the description, and you can have a private and discreet chat with myself. Just make sure you mention MDP to pick up that 33% discount and priority onboarding.
Awesome, mate. And I'm all set up and ready to go with your guys as well. They've been so attentive. They're so helpful. And we've got the limit orders placed, and I want to go shopping.
Yes, sir. Let's get it, baby. Let's do it.
All right, my friend. We'll see you on the next episode.
Take care, my friend.
This ain't a flex. It's a war on your capital, your time, and your mind. Mayhem in motion, that's the open bell. Markets run red while the headlines sell. They hedge the crash while you chase the climb. Smiling on screens while they buy your time. The algorithms don't fade, it was people fade. Every tap's a contract, every post is played. You ain't broke cause you're weak, you was born into theft. A system that profits when there's nothing left. This ain't fall flash, I'm stacking the last. Protecting my blood from a digital past. Bitcoin ain't hype, it's defense by design. A firewall built for the family line.